Ladies and gentlemen, we are now progressing to the two of the final spotlights that we have on our program. So we've got two items on our programs. Both of these items are spotlights. The first spotlight that we're going to be focusing on is in reference to the question of how faster payments can bridge gaps in order to enable seamless, affordable, interoperable, accessible, and inclusive domestic and cross-border payments. I'm going to introduce the two speakers who are going to be leading us in that regard shortly. And then the last spotlight session is going to be focusing on leveraging emerging digital payments to address digital and financial exclusion. And again, I've got two stellar speakers and thought leaders who are going to be leading us through that conversation. I made a couple of pacts and agreements and contracts with a few people during lunch, and that was that they were going to make sure they put their microphones on for the sessions and actually ask questions and comments. The only difference is that you might not know that I made that pact with you. So anybody and everybody that spoke to me during the break, you're on. Because I know what you look like, and I'm going to come and find you and make sure that you're asking a question or contributing a comment. So standing by, please help me welcome Benjamin Lee. He is an advisor at the BIS Innovation Hub in Singapore. Let's give Benjamin a big round of applause. Thank you so much, Benjamin. I'm going to ask you to go straight to the podium, and I'm going to invite Stephen Linnell. Stephen, let's give Stephen a big round of applause. Thank you very much, Chief Executive Officer of BankservAfrica. Thank you very much for being here. Again, ladies and gentlemen, we're just going to run it as we've done before. 20 or so minutes to start, 20 or so minutes to add, and then we're going to open it up for us to all have a conversation. Over to you. Thank you so much.
Hello. Can everyone hear me? It's always most exciting to be post-lunch, presentation. So keep it as exciting as we can. Sawubona and how's it? I hope I got that right. Thank you for this very kind invitation to this year's SARB Payments Conference. To organizers, you have done a tremendous job. It's always a privilege and honor to speak to you today. And this year's theme of sort of shaping the future of payments for South Africa is really timely and apt. South Africa, as you've heard, and many of you will know, has been a dynamic sort of payments, leader in many regards, and your robust national payments system with a strong history of payments processing. This conference has been an opportunity to take stock of the many achievements that you have achieved together as an ecosystem and an industry. And under this Vision 2025 banner, many sort of holistic goals have been laid out, and now is a good time to sort of stocktake and plan ahead. And that vibrancy and extensive discussions that you've been having today is evidence of that. In a similar vein, we at the BIS Innovation Hub, which is a sister, unit to Anike's earlier presentation, but we've been sort of also tinkering and looking at sort of experiments within this fast payment space and looking at how we can sort of build the future of payments infrastructure ecosystems collectively. Just a bit of background. We are somewhat new, so let me introduce ourselves first. The background of the BIS, we are a unit under the Bank for International Settlements. And for those of you who don't know, the Bank for International Settlements, BIS, is an international organization based in Basel, Switzerland. It's owned by 63 central banks, including the SARB, from around the world, right? And for over 9 decades, the BIS has been the principal forum for collaboration among central banks globally. We collaborate on many sort of activities and contribute to monetary and financial stability. Now, the Innovation Hub is the new kid on the block. So in 2019, together with a global network of host central banks, the BIS Innovation Hub was established to serve as a platform for further catalyzing innovation. And we now have 7 centers around the world spread out, and we work collaboratively with not just central banks in these countries, but across these regions as well. In the areas of work, essentially we have 3-4 mandate. First, we look at scanning the horizon for new technologies and finding solutions, which many of you in the banks, industries have already been sort of championing. Second, we also look at actually rolling our sleeves and running sort of proof of concepts, learning and by prototypes, and then implementing minimal viable products that can go out eventually. Third, we share what we learn with central banking communities. So again, this is a sort of a good example of the sort of forums where we are able to share. I have a little bit of a video. So Project Nexus has been one of our sort of flagship initiatives that Innovation Hub in Singapore, where I'm from. With our partners, we've been incubating this for several years now. And the primary objective of this project has been to establish a multilateral platform, an arrangement to connect faster payment systems so as to scale it globally. And they often say a picture is worth 1,000 words, so nothing like watching a video to say many thousand words. So if I could click this video and play it.
Digital payments have become so easy that we hardly give it a thought. With a few taps of your thumb, and you're done. Except when it comes to sending a payment to another country. Despite all of our advancements, the challenges and frustrations remain. Now, a solution is near. Instant payment systems in different countries connecting once through a single hub. The solution is called Nexus, a project led out of the Bank for International Settlements Innovation Hub in Singapore with our partners around the world.
The success of Project Nexus is enabling a coalition of first-moving countries to work towards connecting their domestic fast payment systems.
Nexus links your bank account with an applicable ID, such as a phone number, allowing you to send money across borders within seconds.
With Nexus, we can achieve instant cross-border payments linkages at scale through a multilateral approach.
Central banks have always played a role in payments as a public good. With Nexus, this role will be extended to cross-border payments, maximizing the network effects.
It's a natural market for both payments and remittances, so Thailand is in a good position to benefit from this. And that's reflected in our strategy and our approach.
There is a compelling case to develop a multilateral payment network that will further improve on our existing bilateral payment linkages.
One of the value propositions for us from Nexus is being able to link up very, very easily and speedily with other economies as well.
According to a World Bank assessment, the average cost of remittances is about 6.2% or so. Even at 6.2%, I think there is considerable scope for reducing the cost, and Project Nexus is trying to achieve that.
This collaboration with partner countries will help deliver a platform that is scalable, low cost, and benchmarked against global standards.
We expect cross-border exchanges in commerce, tourism, employment, and education to grow. Instant payments connectivity like Nexus will support the growth of these exchanges.
Central banks, such as ourselves, need to play an important role. This includes setting the overall tone, fostering collaboration, and streamlining the approach.
It is a partnership of central banks with a shared vision of transforming cross-border payments so that it's efficient and reliable.
This is a precursor to greater international cooperation among countries to achieve these twin objectives of making fast payments at a reduced cost.
The BIS is proud to participate with our partners in this project to advance our shared vision of a global multilateral network of connected fast payment systems.
Nexus has the potential to be a global service, creating benefits for economies and citizens around the world.
Right. I hope that gave you a sense of what it was and what the aims of Nexus is. Now, a quick word about retail faster payments, also known as instant, real-time, immediate, rapid payments. And most of these systems have been developed to enable immediate fund availability to beneficiaries across payment service providers, and it's often used on a 24/7, 365-day basis. These are account-to-account payments and can be used by individuals and even businesses. PaySharp here in South Africa is an example of the fast payment system. And okay, actually use the same slide, but I think what we can take away is globally now there are now more than 70. In fact, I think there was another slide. Liam might have used it. 100 countries have implemented some form of an FPS system, and while most of these have been developed for domestic usage, though, there has been a range of ownership. Again, it was mentioned this morning, ranging from those that are fully owned by the respective central banks, right through to those that are privately owned or even a hybrid of the two. And that's important because, again, this reflects that sort of public-private nature with something like fast payment systems and why we need to work collaboratively between the central banks and the industry. And interestingly now, some jurisdictions have also started to then explore how we can use this infrastructure and this technology that was built for domestic purposes, but on a cross-border basis. And they've started to do these connections on a bilateral basis. We've seen this proliferating, especially in systems across the Asia-Pacific region, Middle East, and here in Africa especially. In April 2021, Singapore's PayNow and Thailand's PromptPay were one of the first to do full integration, of their fast payment systems and allowing customers of the banking, of the participants, the PSPs on their respective networks to interoperate using their existing, networks. This was followed, I think, subsequently by other linkages in the region and globally as well. Singapore, India, and other sort of corridors followed suit, for example. And this demonstrates at least the potential that can arise from interlinking FPS systems. However, while bilateral linkages have been promising, they are definitely not scalable. Establishing each bilateral link often involves a very complex technical integration and multi-party legal negotiations. We've been sort of looking at the models. Typically, it takes a country anything from 2 years to establish one bilateral link. And after a while, it becomes very complex and unwieldy as you continue to do more and more of this. And so the growth of this becomes very non-linear as well. To illustrate, the math is there. 3 countries requires 3 links. The minute you have 20 countries, you need to establish 190 links. If you want to connect 70 countries there, you need 2,415 links. Essentially, impossible task to do in any of our lifetimes. So bilateral links, whilst is promising, is potentially a limitation as well. So how else then can we allow ourselves to achieve that sort of benefit of using faster payment systems on a cross-border basis, but in a more sort of multilateral set, And this is where Nexus comes in. So Nexus really is intended to be a behind-the-scenes service that really works with the existing IPS infrastructures and operators to connect their respective IPSs or FPSs. An FPS operator connects to Nexus and then uses a common set of APIs and ISO 20022 messages to exchange payment instructions and other related information with other FPS operators via the Nexus technology. And there's a significant benefit for IPS operators who then now can start to process cross-border payments without needing to build their own bilateral links. Further, a common Nexus scheme rulebook helps to manage the differences between the domestic fast payment scheme rulebooks and ensures that differences in rules and operating procedures are standardized as much as possible. And this helps to minimize that sort of operational complexity and costs when you're connecting multiple countries. Diagrammatically, the way to think about Nexus is that it's like a centralized bridge connecting 2 legs of your domestic fast payment system. So this is a typical flow or chain of how a Nexus payment would sort of look like. So they are, 2 ends of your domestic fast payment systems, but interlinked, and then there is a FX sort of, settlements of layer and tier that uses the current state of, correspondent banks to settle. So in that sense, again, the model then becomes quite scalable if you think about that sort of linkages, because it reuses a lot of the existing infrastructure and arrangements, but in a standardized manner to allow for this sort of cross-border operation. This slide gives you a quick snapshot of some of the key features and design elements, and we have actually, got a lot of these details in a report that I'll share the QR links at the end of this. But essentially, we've tried to be very deliberate in sort of thinking through what the Nexus model should be, and we've designed it to be very complementary and additive to what's out there in the industry. So again, it's not our intention for Nexus to be that one network to overtake or rule them all. Far from it. We actually want Nexus to be complementary to what is in existence today. And we also have built Nexus to build upon some of the best-in-class functionalities that FPS systems have already incorporated. For example, the use of proxy lookups and designing the sort of user interface to allow for transparency upfront for senders. And Nexus is also fully committed. I think a lot of our sort of inspiration was started by the G20 cross-border, enhancing cross-border payments roadmap, particularly around these goals of speed, cost, access, and transparency. So I think we want to ensure that Nexus achieves this ultimately as it sort of operates globally. So at cost, again, that's something that we think that if it's implemented, will have real substantial benefits for end users. Now, this slide, we've often asked, where is Nexus? What's going to happen as it's operationalized? And this slide gives a very quick illustration of how we see Nexus's deployment and trajectory, starting first with a coalition of first movers, partly because, till to date, there's no other multilateral system that's fully in market. So again, we want to make sure that this is operational, it's in market. And over time, what we do want to do is to ensure that it is scalable and it connects and allows other interested jurisdictions, regions to also be able to connect. And because it's a bridging concept, the benefit of this model is that for everybody else that's already on the model, it's very minimal change that you need to do. But the integration for everybody else allows the whole network as a whole to then benefit from the added volumes that collectively everybody can then tap on once you've connected them. So we're starting also in terms of the use cases. We're starting very much like the FPS route, starting to use this primarily for account-to-account transfers. However, again, like how the FPSs have started to build on additional overlay services, we don't think that Nexus in its long end state needs to also be sort of limited only to account-to-account. And eventually, these things can also help to allow that sort of utilization of this infrastructure as it gets used more. So like I said at the start of our presentation, Nexus has been a little bit of a labor of love for us at the Innovation Center in Singapore and our partners. This has been very much an iterative journey, as you see in this slide. And we've been sort of engaging, working with the different partners to refine it. But let me zoom in on what was most recently concluded, what was in phase 3 of work. And that was actually the result of about a year of extensive work with 5 Southeast Asian countries. And really what we did was we took the Nexus blueprint and also the proof of concept that we had developed and then stress tested it against these real world systems of the 5 countries. So we said, okay, does this work in real world? And I think that also allowed us to realize very quickly that other than a technology integration, you need a few more things. And equally critical were, for example, you need to finalize the technology architecture and operational model to be sort of scalable. So that what gave us a lot of points to refine, and now the model is very robustly sort of set out. You also importantly need a governance scheme and possible oversight arrangements that would accommodate the regulatory differences between countries while ensuring the appropriate risk management, safety, efficiency, and resilience of Nexus payments is maintained. And most importantly, the third bit was also we wanted to ensure that there was a viable business and revenue model for something like this to coexist. Because ultimately, this needs to also be self-sufficient and at the same time ensure that different participants across the ecosystem have incentives to join. So I'll give you an example. For example, we have to balance out between net receiving and net sending countries. So the model was designed in such a way that, again, everybody across this ecosystem will have incentives and will have a proportionate share for using Nexus rails. We also actively engage, I think importantly in this phase, central banks, operators, fintech players, standard-setting bodies, not just within the ASEAN region, but broadly around the world. In fact, some of the major players were all very actively engaged. And that gave us a chance to validate this developed work and this model. And we're quite confident that the scalability of this as it grows to other countries and regions can be maintained. Let me sort of cap this off with this link. So I mentioned this phase 3 report. So a lot of the details are there, and you can encourage everyone interested to go through that. We will also in about a month's time release very comprehensive technical documentation. So again, that's meant to help IPS operators, banks, as you're starting to assess what this means for your own sort of development stack. So that's something that will also come out and be released in due course, and we're happy to share those links once it's out. And importantly, there is now appetite amongst a group of first mover jurisdictions to bring Nexus into live operations. So we're working very closely with them to do that. And as Nexus becomes operational, it will go a long way, we believe, in enabling this goal of interoperability of FPSs and enhanced cross-border payments. And I think importantly as well, it also strengthens the use case for domestic fast payment systems to be used when that can also be used easily for cross-border purposes. So definitely stay tuned to this space. I think lots of exciting developments will happen. We are looking forward to the day that PaySharp and other sort of fast payment systems across Africa and other regions are also part of this network. With that, let me thank you once again for your attention and interest in the work we've been doing at the BIS Innovation Hub, particularly around Nexus. My sincere thanks again to the SARB organizers for this invitation and the warm hospitality through this week. Baye danke. Again, I hope I got that right.
Thank you very much, Benjamin. I'm going to invite you to take a seat here. And then, of course, Stephen, I'm going to invite you to go to the podium. And I'll allow you to say, ladies and gentlemen, even at this moment, you're more than welcome to start queuing in any questions and comments that you might have for Benjamin. Of course, Stephen might take a take on those questions as well. Tim, I'm ready for us to reset the clock. Thank you so much. Stephen, over to you.
Afternoon, everyone. It was always going to be tough being the guys on stage immediately after lunch, but Benjamin, it's a hell of a lot harder following you, so thanks for that. Certainly on the topic of payments and good financial outcomes, the BIS pretty much wrote the book on it. The other upside, though, is you've covered probably 50% of my slides, so I think we'll whip through this fairly quickly. Staying on the topic, though, faster payments. I mean, really, what is the rush? I mean, I say, let's go back to the charm when you're sitting there constantly refreshing your banking app, just pleading for your paycheck to clear that minute quicker. Or think of all the good days that we're going to miss, sitting on the phone with our favorite call center agent, Sally, just asking her to please trace your funds, as it's like a missing take-a-lot order. I tell you, faster payments are going to rob us of the thrill of delayed gratification. Imagine someone paying you and instinctively knowing your funds are there. Where's the fun? Where's the heart-racing anticipation? And don't even get me started on cash. We've all been there, 15 minutes in a queue at Pick and Pay. You get to the front, you're pulling out your pockets, and you scatter your coins all over the floor, and you spend 5 minutes picking them up. Or you know, when you're standing there with a bunch of 10 Rand notes, counting them off as if you're about to secure a major mob deal, when in fact you're just buying a chicken pie or getting Pradeepa's flowers. With faster payments, there is no drama. Scan, click, done. How utterly boring. Who even asked for this kind of sorcery? Okay, now I'm fired. So I've been somewhat provocative, and I think what I'm trying to say is that whenever the topic faster payments comes up, it is accompanied with this litany of things that it's envisioned to cure. Even if we look at the screen today, it's seamless, affordable, interoperable, accessible, inclusive. And when you see that, you kind of would be forgiven for hoping that that list would just go on and you know, maybe include, I don't know, like a decent national football team, or you know, perhaps maybe another 25 bips on the repo, just for a friend. So I think what we're seeing when we talk about faster payments is just this expression of hope. And the hope is largely centered around financial inclusion. And through financial inclusion, good economic upliftment. And so what I hope to do over the next was going to be 15, now 15 minus all of Ben's slides, minutes, is whip through just a few questions that I hope will anchor what we really believe the actual value of a faster payment system is. The first question is, do we believe there's a broad causative link between general digital financial solutions and financial inclusion? Then secondly, and more specifically, is there a narrow causative link between faster payments and, again, financial inclusion? Then in countries where we've seen faster payments scale significantly and successfully, does the evidence for that financial inclusion actually bear out on the ground? And then, if it does, what are the critical success factors that we can learn from these scaled economies? Notwithstanding the benefits, are there additional risks that we should factor in? And then in conclusion, just a consideration as to, given all the benefits we may be considering, do we believe faster payments will become the unitary payment system going forward? So, when we do speak about financial inclusion, we tend to speak fairly generally, and I'm having a mistake here, but we tend to speak fairly generally about the term. So just to anchor what we mean by it, financial inclusion means the very broad or universal access to a wide range of financial services at a low cost. And core to that is the access to a transactional account. And it doesn't matter whether it's a traditional financial services provider or mobile money provider, those transactional accounts become the gateway to accessing other financial services. And so really an important and formative step. And we can see with recent analysis by the World Bank, they have estimated that from a global perspective, we have about 76% penetration of transactional accounts. And that's really important, but it also doesn't talk to the distribution of this. And distribution is important because if we see certain regions are generating higher growth in account adoption, then perhaps there's things we can learn from it. And as you see in the graph here, or the slide here, in the recent Financial Inclusion Index study, we can see that in countries that have generated greater financial inclusion, so Southeast Asia, Latin America, in those countries in particular, we're seeing a build-up and an acceleration of digital financial services. Taking it a step further, though, if transactional account access is important, what drives transactional account adoption? And one of the key things there is the widespread use of electronic payments. And the reason electronic payments are important is simply because they create the data trail from which other financial services will then either lend or insure or invest. And so that's really important. But it's not just an anecdotal observation. The BIS, thank you, Ben, did an analysis that came to the conclusion that for every 1% increase in electronic payments, there was a concomitant 0.1% increase in the per capita GDP. So what we take from this is there is genuinely a link between digital financial services and electronic payments in particular and financial inclusion. But what about faster payments? Well, as Ben alluded to, faster payments go through a number of names, instant payments, real-time payments, immediate payments. But in fact, what they are payment systems that allow for immediate fund availability on a 24/7 basis. And sort of still reminiscing on this weekend's game, whilst they are fast, unlike the Cheslin Colby meme, they are credit push payments and not debit pull payments. So why do we think faster payments can convey a benefit in financial inclusion? Well, the most important reason is that we believe that because they are low cost and because they give immediate access, well, these things are particularly important to the financially burdened. Second reason is that we've seen with faster payments, they seem to level the playing field between bank and non-bank payment systems, and that has generated a significant amount of innovation and competition. Thirdly, they tend to launch with fairly useful and technologically advanced features, such as easy-to-remember aliases or request-to-pay capabilities, or importantly, something like a QR code, which has really unlocked the mobile connectivity access. And then lastly, and perhaps most importantly, is they are arguably the best alternative we have today to cash. And as we've said in the previous section, the migration out of cash into electronic payments has a positive impact on financial inclusion. So it's nominally a positive step. If we look at some of the characteristic comparisons between them, settlement, speed, availability, spend control, and affordability, these are all very much on par between cash and faster payments. Where perhaps we would have to give half marks to is around convenience and inclusivity. And I say that not necessarily in the absolute sense, but in countries or regions where they have low infrastructure enablement, there can be limiting features, particularly for online access. And so that is something that's surmountable, but potentially limiting upfront. Where faster payments really come into their own, though, is certainly around usability, so e-commerce and in-person, and customer protection, perhaps the most important there. And I don't mean just in terms of the protection that schemes can offer, but very much also in the security, the physical security that comes with not carrying cash. So we have now also in this section argued that there's a narrow causative link between faster payments and financial inclusion. And so the obvious question is, well, in countries where we have seen faster payment systems scale, do we actually see that financial inclusion has risen by the same amount? So as Ben mentioned, the world at large, every corner is now using faster payments. As of, I think it was 23, again, we know now that there's about 100 countries that are either using or implementing faster payments. These are growing perhaps at around now 16%. They have a market penetration of almost 20% of all payments. And so by 2028, or the next 5 years, we expect that penetration to rise to about 25%. So the real question is not whether someone is using faster payments, it's more around who has used it particularly well, and to learn from that. On the next slide, no great big reveal here. The names that you see on the podium are probably the poster children for successful implementations: India, Brazil, Thailand, South Korea. If we look at volume alone, India clearly outstrips the next equivalent market sizes. If we take a per capita slice to that, well, then the picture is slightly different. India drops out, and we see a much closer coupling of the comparable countries there. So on average, sort of one transaction a month one transaction per day on the faster payment system. What is perhaps a more nuanced piece of data to consider, though, is how these faster payments themselves have scaled through time. And if we look here, you'll notice that it has tended to take between 6 to 8 years post-inception before countries really achieve scale. And by scale, I mean probably above 30% market penetration. The obvious outlier, though, of course, is Brazil PIX. So Brazil managed to achieve 80% penetration inside of the first 2.5 years. Cumulatively, the volumes exceed the summation of both debit and credit cards in country. And if we're staying with financial inclusion, PIX managed to bring in at least 70 million new participants out of the analog space into the digital world. And so very clearly there's a demonstrable benefit and effect here. If we bring it a little bit closer to home, South Africa is no stranger to faster payments. We've had a real-time payment system in the country since 2006. But realistically, it's only been with the deployment of PayShap last year that we've had a genuine faster payment system available to the population. And whilst it really is in its infancy, particularly in the 6 to 8 years that I've mentioned before, there are a few standout points that are worth considering. We know now, 1.5 years in, that we've seen payments emanating from over 13 million accounts. Now that gives some indication of decent penetration. I think my own reflection on that is probably we're seeing the benefits of having a high bank account penetration in South Africa. And so you're starting to see the use of the payment system resembling that account penetration in the economy that I mentioned. And so the goal here really must be to penetrate above what traditional financial service account penetration is. The second one is really just the growth, albeit these things take time. Certainly in the last 3 months, we're seeing growth rates of over 100%. And so we expect this to continue, not just with the migration of legacy rails onto PayShap, but as we release important enabling features. Most notably, and this week, I think that the team is here, we released the PayShap QR code standard, so that hopefully will build an acceptance network that we haven't yet been able to penetrate. We've got requests going live in a month, and the transactional limit is increasing to 50,000 Rand too. So definitely something we're very passionate about and sort of goal seeking to grow rapidly. So I guess the next question is, if we go back to what we were trying to answer up front, what does the data show? Well, on cash specifically, in countries where we are seeing faster payments grow rapidly, we're seeing a consequential decline in the cash in circulation. And this is obviously a suggested view, and I say that because This particular analysis doesn't strip out other causal features such as, let's say, demonetization, which might have occurred as we saw in India. But nevertheless, there is a correlation, an obvious correlation between the scaling of faster payment systems and the reduction in cash in circulation. More importantly than just suggestion, though, again, thanks to the BIS, we see a study here that has looked, has done a regression assessment around whether the presence of faster payment systems have had a positive effect on the 3 drivers of financial inclusion. And the answer there is yes, and in all 3 factors, both on an account availability and use, in electronic payments use, and what I thought was more surprising, but the strongest coefficient was actually around in access to financial loans and debt. So very much positive. I guess in concluding on this section, we now can demonstrably say, even in practice, where countries have scaled, we are seeing that the financial inclusion is rising along with that penetration too. So if we assume there is a good to pursue here, then the next question is, well, how do we get there? And it's worth us looking at some of the benefits, or at least some of the critical success factors that we've observed in the countries that have scaled faster payment systems. We've broken the analysis down here by 5 categories. The first we'd like to look at is the user journeys and experience. And surprisingly, but importantly here, the most critical driver is simplicity and standardization. And you might think, well, that just seems counterintuitive. We always think it's innovation that drives adoption. Well, I think in the formative stages of scaling a payment system, it tends to be the simplicity and standardization that gets scale. Certainly as it matures, that ratio is likely to switch. The other important feature is just the channels on which faster payment solutions can be accessed or initiated. So the more, the merrier, so to speak. Whether it's for your banking app, a standalone app, or initiation through QR codes, that penetration is really important. From a functionality perspective, a broad set of use cases beyond just peer-to-peer payments is critical, and then a wide range of features, ongoing wide range of features, such as QR codes and request to pay is key. Then broad participation, I think it's kind of obvious, numbers breed numbers, and so I think what was interesting in this particular case is that the participation seemed to require, let's say, a legislative nudge to get there. It required steps to widen the participation in the ecosystem, and even within that, it required some mandates to enforce or coerce individuals to use the system. And so, you know, this is often at the start of a journey, one does require some level of coercion to get it going. Fees, I mean, we've discussed the benefits of low cost. Well, these tend to be close to zero to the end consumer. The corollary to that is that they tend to be funded on the corporate side. And I don't think that's necessarily begrudged, because as we know, compared to other payment rails, they tend to come at a significant lower interchange or acceptance cost. And so it's nominally a net benefit for the market. And then lastly, market education and awareness. And I think this, Ben touched on the public-private partnership element. This is key, that there's a consistent message being playing out in different sectors. But it's not just my own analysis on this. I think if we take a review again, thanks to the BIS, around a broad technical assessment of a wide range of faster payment systems. The BIS recently looked at 4 design features and tried to map or assess whether they had particularly strong drivers in adoption, or at least volume take-up, and they found a correlation with 3 of them. There was a positive correlation on central bank ownership, on non-bank participation, and then in the high number of use cases. And sort of talking the Nexus book, cross-border payments actually was one of the key drivers there. So importantly, I think in the last 2 slides we can see that there's a high degree of congruence, not just in the qualitative assessment, but in the qualitative analysis that has happened too. And so whilst every region and every country is going to have its own nuances, there's certainly some learning factors that we can bring to bear. Just to pour a little bit of cold water on things, there are obviously unique risks to faster payments. Not unmitigable, but important to notice. So certainly liquidity and credit risk management is somewhat more complicated, partly because the demand for use extends beyond traditional business hours, and so it requires a more complex management of these features. The operational burden is particularly high. There's no time for downtime. And then lastly, on fraud, and I see there's a topic tomorrow, which is great, but as you've often heard, faster payments can equal faster fraud, and to some extent that is true. There's a diminished time between which initiation takes place and authorization occurs, and that diminishes the ability to be able to assess potential risks. Also, given it's 24/7, the evening times do create new vectors of attack. And then lastly, sort of the payment finality makes recoverability somewhat more difficult. But again, not to be disheartened, it's something Geeta mentioned, sort of technology tends not to be the problem, and I think these three issues here can all be solved by technology, and so I think we're just on a gradual path for improvement. And then rounding up, we've largely covered the fact that we are clearly of the view that faster payments do generate positive financial inclusion outcomes. We've assessed the critical success factors under which we feel we can achieve those. And so the remaining question is whether we believe that we are on this inevitable walk towards faster payments becoming the unique payment type in the market. And I think here, albeit is predictive and still early days, if we look at some of those countries that we discussed earlier that have already scaled, we can see that although there is a significant and ongoing increase in faster payments, it is probably not likely to eliminate other payment rails. We can see here in the stats that in terms of all payments, the percentages are around 20 to 40% penetration. In terms of electronic payments, it goes much higher, so between 50 and 90. That's real deep inroads. But we will probably expect to see things like cross-border and larger transactions still remitting under the card networks, and we expect cash to still stay around. So realistically, there's not a consistent walk or path to walk here. It very much depends on the approach that each country takes to deploying the capability. It depends on sort of regional nuances like the available infrastructure, and it depends on user preferences. But certainly we can see that there's a net benefit here, and I think it gives us a very clear goal as to what we want to achieve, certainly in South Africa, and I think the world at large. Okay, thank you very much. That's me done. Thank you.
Thank you very much, Stephen. I must say, I'm still reflecting on what's the rush, what's the drama, and I certainly think that is probably something I'm going to walk in at home and tell my husband about the payments conference and one of the key sound bites that stood out for me. We've got a few minutes to answer some of your questions, to invite you to make some comments. I'd love to see some of those microphones coming on. I don't see anything on the screen now, but let me shoot something that I think perhaps the both of you can speak to. Earlier on today, I think it might have been Harish again who was speaking to the opportunity to leverage the regional economic communities on the continent when we start thinking about cross-border payments in particular. Benjamin, you spoke about how bilateral agreements are not the way to scale, and we've got to be thinking a whole lot more multilaterally. And Stephen, I want to come back to that as well. And the one thing that I think we haven't spoken about today is the extent to which politics can get in the way. And I suppose I want to put to you, Benjamin first, is to say, how easy is it to transcend bilateral arrangements and go straight into multilateral arrangements? And does it work better if you have a regional economic community in place already?
Yeah, no, thanks. That's a good question. Sorry, can you?
No, that's me.
Oh, okay. Yeah. I think the way we think about it, the bilateral links was showing the art of the possible. And the truth is, bilateral links probably will work best and most for the corridors that have the strongest reasons for it. Trade corridors, remittance corridors. Those actually, to be fair, are actually quite well served already by a lot of offerings today. Private rails, closed rails, those things are all sort of in existence. What we're finding actually is the smaller corridors, the illiquid pairs, that actually don't really benefit. And ultimately payments, especially at the sort of retail account to account level, it's a volumes business.
Yeah.
And the more you can connect and scale everybody, the more the opportunity and the upside is for everybody else. So I think that's why we have a firm belief that the longer term approach should be have this multilateral approach, keep it open, keep it accessible, and it's sort of back-end infrastructure. So we do want to, I guess to Stephen's point, keep it simple.
Yeah.
Users are used to what they're used to, the bank apps that they use to access the domestic rails, those should be maintained, even for cross-border. Now, the geopolitical question is, again, the money question. We're all living in the realities of it is. We are trying to think about it, at least from our sort of, ground-up view, that the rails should remain open regardless, right? Countries, for whatever reasons, may decide you need to moderate, down-throttle, up-throttle certain corridors, but the rest of the network should remain open and accessible. And I think that's our ingoing, view. We're trying to work hard to ensure that these are open, and accessible to all. But we'll see as things evolve. But right now, at least that's definitely the ambition, the aim.
That's fantastic. And I see a couple of numbers that popped on my screen, Stephen. So I'm going to actually go there rather than to bring you into that conversation as well. But I thought what you said, Benjamin, is so important because as we think about regional economic corridors, we oftentimes make the mistake of just thinking about physical infrastructure. When we think about soft infrastructures, we're probably just thinking about technology that enables trade and the movements of people and goods, and we forget the payments conversation, which is like the lubricant that makes all of that possible. So thank you for that. I want to go to table 68, then I'm going to table 25, and then I'm going to wrap it with table 44. So 68, you get to go first. Please, can you introduce yourself, and please go ahead with your question.
Looking at faster payments, what about programmatic payments? Because we're seeing in many African economies that the Web3 and dollar-based stablecoins are actually creating programmatic payment solutions and faster payment solutions. Is there any markets where programmatic payments has been married to faster payments by national payment systems?
Toby, thank you so much. And so you're going to have to do a crash course for me, Stephen, on programmatic payments so that we can all get onto the same page. So I'll take that, Toby. Table 25.
My name is Dr. Juma from SAB. I have just one question. In terms of the paradigm shift, which we are seeing at the moment, where there's some countries who want to de-dollarize their economy. So my question is to do with what is the impact of that?
Sure.
On the cross-border payments? Yes.
Thank you very much, Dr. Juma. What is the impact of de-dollarizing on cross-border payments? And then the final contribution from the front. Please go ahead, sir.
My question really goes to the BIS. I really want to see, I think I'm very happy with the examples that you have given with regard to the developing economies, but I would like to see the story regarding the advanced economies. Are you saying they've achieved the goal, or what's the story there? Thank you very much.
Thank you very much. So I think those are great questions. So I think at the essence of that is that when we start, you started the presentation first, Benjamin, I think some of the regions you mentioned, Africa, Asia Pacific, Middle East, and the question here is, are we omitting some of the advanced nations because they've already achieved financial inclusion and everything is fine? So let's start on the crash course. Programmatic payments, what are they? And then more importantly, to Toby's question, how do they stack up against faster payment systems?
I'm going to be making up, but thanks Toby. Obviously you brought a Web3 question in. I presume you're talking about smart contracts and sort of auto execution on the top of a DLT platform. So,
can you give us a thumbs up, Toby, if we're on the right track? Okay, perfect, yes.
Okay, doesn't make it any easier to answer. I think the benefit of stable coins and sort of the DLT infrastructure is that you can layer on top of that auto-executing logic that doesn't require a humanistic response. So I think as a framework, it's a perfect technological solution to build auto-executable activity. Now, we've run batch systems for hundreds of years as well. I mean, you can build codified logic to auto-execute or to generate programmatic responses to anything. And so you can also do it in account-to-account payments, like faster payments. You're just using different tools. And my comment when we were talking about the risks was, I think technology is going to solve some of those particular problems, something like AI in particular in fraud. I don't think it's simply the preserve of the Web3 environment. The benefit of the Web3 environment, though, is it is self-contained, and so the executable ability is built into the protocols, whereas I think with other sort of applications like faster payments, we have to build it on top.
So, Benjamin, the question was to the both of you. So what's your take on programmatic payments?
Yeah, I mean, I think on our side, we're also sort of starting to come into a sort of view that it's not going to be an either-or. The reality is there will be, a whole proliferation of existing legacy infrastructure and newer systems. And so the important thing is they need to find a way to coexist. And that's why, recently there's been discussion of things like how do we have a unified ledger, how do we ensure interoperability. And I think that's the important bit. So there will be, I think in my mind, users who want particular channels, and that's perfectly fine. But what we will have to, I think, deal with in the next 10, 20 years is a situation where you will have a range of different sort of offerings. And it's not to say, we heard this morning, cash is not going out, nor are faster payment system, RTGS systems, those things are also going out.
Yeah.
And then in the new realm, CBDCs, digital assets, crypto, those things are also coming. So I think the important bit is they will all be there, and we just have to find a way to ensure that they all have a way to interoperate.
Yeah, it's a very interesting comment in light of, the earlier thread of moving away from monopolistic markets and seeing a proliferation of different players, coming together. And so that's really interesting where that conversation has landed. I want to talk a little bit about the Dr. Juma's question around the de-dollarization and what that means for cross-border payments. And maybe I'll come to you first, Stephen, because I didn't give you a take at the question around the regional economic corridors, but this is somewhat related. What's your take on that?
I think on the first point, I think multilaterals tend to take longer to scale, and it's probably because everyone's in this race condition waiting for the first person to go live, whereas with a bilateral you can slim it down to a single transaction, single counterparty, and get it done, and you build from there. The other reason is you've got incumbency. You've got to be able to shift people off pre-existing bilaterals onto a multilateral. And when we saw the slide from Ben, I think the maths proves out they are better, and when they start scaling, they scale rapidly, but it does require, there's like an application of Newton's first and third law here. You've got to apply a countervailing force to break the inertia, and I think that makes it slow. On the de-dollarization point, I'm not sure it makes any difference, to be honest. I think outside of large trade activity, most of what we're talking about in sort of faster payment and sort of small transactional costs, once you're on an electronic platform, the underlying currency is actually not the complexity, because you're going to be crossing a spread at some point in any event. And so the base rate is not your problem. I'm not sure if Ben's got a different view on that.
No. I think it's a big topic, big question. So that itself, I agree. At least with Nexus, we're not tackling that. In some ways, that's why, again, the beauty of it is it is allowing two domestic payments, essentially. And for most other actors, actually, you deal in single currency, your domestic currency. It's only your FX providers or, your...
And that was sitting in the middle of the image that you showed us to say Nexus plus the FX provider is like sitting smack in the middle. So is that Forex trade-off an important part of the design feature?
Yeah, so that also allows us to build on what is already existent today, rely on that. Whatever the domestic requirements is on the FX policy of the country, those things apply. Because that will be whoever the participants are for your FX providers for each corridor.
Final comment, where are the advanced countries? Have they ticked the box of a financial inclusion, and that's why we're not having a conversation about them? That's to you, Benjamin. That was the question, the final one to say. So, we didn't see too much of a reference on the advanced economies.
Yeah, so again, I would take some of this in perspective. It's not a case that, I think each country deals with their own sort of unique challenges.
Sure.
In a lot of the advanced countries, I think they have a lot of legacy infrastructure that they're also dealing with. And so that sort of refresh rate isn't as fast or apparent for them. Some of the more sort of newer countries, I have the option now to consider newer technology. So again, something like Nexus, what we're trying to do is say, even if you don't connect today, think about whether you want to use a cross-border use case, and if so, build your systems to be interoperable. In fact, the technical stacks are usually easy to solve. It's your sort of standardization of treatment of how you sort of the rules, the sort of processes and procedures that you want to harmonize. I don't think it's a case. We don't read too much into the countries not being. I think they are also dealing different issues. I would say within the newer countries, that's probably where some of the new innovations, because the systems are just newer and more.
Stephen, a final comment. I've got less than a minute to go, but I really liked what Benjamin is saying about. Part of the weakness we might find in advanced countries is the inability to refresh quickly because of the legacy systems. And again, I go back to the governor's address in the morning where he was saying part of the challenge is going to be legacy systems, legacy behaviors when we're thinking about the future of payments. I'd love to hear your thoughts on that and whether legacy systems are an important part of the journey towards faster payment systems in South Africa that are over and beyond what we've seen.
Yeah, I think inevitably when one's trying to build the business case, one has to consider the legacy you're going to untangle. So there's a commercial element to it that makes it difficult to get there. Then in a payment context where you're in a network effect, one almost has to harmonize everyone's node on that network, and so there's got to be some synchronicity in terms of the process. I think the legacy is problematic. I think it's the same in developing countries, no different to let's say the developed countries. I think perhaps the drive, the benefit that can be achieved in the so-called developing countries is that much greater, though. We've spoken about financial inclusion, so I think just there's a categorical imperative to overcome those barriers in places like South Africa and Latin America and Southeast Asia that may not exist in some of the more traditionally developed countries.
I think on that note of a categorical imperative to overcome those inertias, it's a beautiful place to wrap up the conversation. Can I please ask you to give Benjamin and Stephen a big round of applause? Gentlemen, thank you very much.
Thank you.